Hi, Bill Kaufman with Remote Trading Room. Well, let's continue our talk about options. But first, remember, this is for educational purposes only. Okay, options, or specifically option activity, or perhaps we should say unusual option activity. All right, well, let's go to the charts and take a look. Okay, welcome to the Thinkorswim. This is the trading page as determined right here. They got the word trade. This is the simulated trading, but the numbers are good. Simulated trading platform is only about 20 minutes behind in the numbers, but right now the market is closed, so all the numbers we see here will be the actual numbers that the entity closed at for today. And we're going to be looking at the first one, DIA. This is Dow Jones Industrials ETF. Okay, and it closed at 354. So when we look at activity, first thing we want to check today's option statistics. Go ahead and open it up. You got calls, you got puts, and we look for the put to call ratio. Well, you had over 90,000 puts, over 44,000 calls. Puts over calls, 2.03. And I will say, once you start hitting 2, that's something to be very wary about. Okay, time and sales. This is the activity. Over here's the column of what time did it happen at. I'm in the Pacific time zone, so I'm 3 hours behind New York, so that's why my time is in my local time is when this trade happened. Then the actual option, 18 August 23, 365 call. The quantity, how many? This was 2,400. 64 cents per share. Remember, options trade in 100 share blocks. So 64 cents a share is really, this one option costs $64. And they did 2,400. So you imagine 2,400 times $64. That's more than I have in my wallet right now. Anyway, moving on, you got market, delta, implied volatility, what the underlying asset trading at, and the big one over here is condition. This thing was tied to an it says spread. So this option right here is actually tied to another one. Okay, the first two rows are the highs for the calls and the puts for that day. So the high call trade today was at 2,400 quantity. The highest put trade for the day was this one, 18 August 23, 295 put, 88.71, 9 cents a share, so $9 an option. And over here it says no spread. So it was an outright. Now how can you tell if it's buy or sell? Well, buys are green and sells are usually red. And whites, Thinkorswim is not telling us. Usually it's a buy, you occasionally be a sell. Sometimes you have to look at it and just say, okay, what's really going on? So let's look at it. 718.45, 1, 2. So these two right here, the 358 call and the 365 call, you got 1,200 and 2,400. So a good chance they bought the 1,200 and they sold the 365 for 64 cents. So twice as many here. So you'd actually 64. They bought twice as many. Subtract that from the 252. So it's a way that they can hedge, how much money they spend for an option. They limit, they're kind of like the price they get in at, and they limit their profit stops at 365 because they bought here and sold there. That's what it means. It's a debit spread. They think it's probably going to go up. And to look on the other way around, okay, let's see if any more spreads. A lot of outrights here. Just outright buying or selling. Buying the 365, buying puts 340, buying put 350, selling a 352, probably picking up some change. You can see, so you just have to go down these to take a look. Tell you what, let's take a look at another entity. And we'll go on up here. Let me get a time and sales. Okay, now let's put in SPY. Whoops, spell SPY. This is the SPDR S&P 500 ETF. Mirrors the S&P 500. Look at the option stats. 5,264,000 plus calls, 7,679,000 plus puts. Puts over calls give you 1.49. Okay, about 50% more puts traded. Remember, this is just traded. How many calls are traded? How many puts were traded? So let's close option stats and go to option time and sales. And sometimes you got to give it a minute here to fill out. Let's see. Give it another 1 potato, 2 potato. It's still thinking. It's still thinking. And well, looks like it might be done. We'll find out here. Okay. Again, this is the time when a trade happened. Oh, it is still filling in. And well, looks like it might be done. So the time is the option, and the first two are the highs of the day for call trades and the highs for the days of a put trade. The quantity, the price, and of course the important column over here, the spreads, or is it blank, which denotes outright. Looks like it's still filling in, but I think we can talk about it a little bit right here. It just so happens it is still filling in. All right, we'll give it another 1 potato, 2 potato. Okay, I think it's done. So, wow. The high trade today for calls was the 4 August 23, 440. Price, call, 10,000. The 1630 is to spread. The 1 September 385 put, 70,000 of them were traded. Well, at a one-time trade, 70,000, 36 cents per share, or $36 per option. $36 times 70,000 was close to $250,000, more than that. Anyway, so let's look what we have here. Look at all those 1 Septembers. Somebody bought the 385, sold the 385, 70,000, 60,000. But you gotta look down here. Here's 1 September. All right. Well, let's look at the times. 826.37, 826.37, 826.37. So it's like the 400, 35,000, the 370, 35,000, and the 385, 70,000. And to go against that, you had the 60,000, 385, 30,000, 370, 30,400 put, and a 20,000, 385 put. Those were all done about an hour later. So just if you add the 60,000 and the 20,000, gives you an 80,000 more. That's very interesting. So it's like 80,000 versus 70. That's like 10,000 more puts sold for same price, 36 cents. 36 cents, 36 cents. So they may be 385, 450. It's only 1 September. It's not, barely 7 weeks. Not even that. Not 7 weeks. 1 September is just about 40 days away. And it would have to come down 10, 15%. So they'll pocket that money as long as it doesn't come down too much further. And let's see right here, the 370, they're buying that, 35,000, they're selling 30,000. Same price. So it's like it's kind of like they're protecting this 385 with a 370, and 370 to 400, same thing. They're buying 35,000, they're selling 30,000, so they're netting 5,000 at the 400 level. And that 5,000 plus the other 5,000, well, that's the 10,000 that they were over on the 385. So it's kind of a interesting way to protect themselves, pick up some change, big change. In the meantime, this one right here, having 1104.53, 440, 440 calls and put, and that almost looks like a straddle. They're buying the call, selling the put, and buying the 440. Stocks up here 454, so that's why I call some 1630. So it's an in the money, out of the money. So that's how they can partially finance that. Interesting time. Down here is just a straight debit. They're selling the 432, 15 September, buying 430 put 15 September, 264, 243. So it costs them 21 cents because you subtract 243 from 264. So 21 cents times 100 is $21 times 8,406. It's close to $17,000. And it's 15 September. So it'd have to be about a 7. So if the S&P starts coming down, that 432 is going to go up in price. And of course, so with a 430. So and as soon as it makes 432, they'll be in the money. So it's an interesting way you see the activity. Okay, let's go check out another one. Let's go to QQQ. That's the Invesco Trust. That's kind of just how you mirror the NASDAQ, QQQ. Get rid of the chain, drop down to the stats. 2.5 million calls, almost 3.4 million puts, 1.32 puts to calls. Puts are ahead. All right, let's see who did what, or rather, what happened. We can never tell who. All right, here it's filling in. A little quicker. Hey, this one looks familiar, doesn't it? 25 August, 320, 70,000, 310, 35,000, 330, 35,000. It's kind of like a little high, a little low, and right there it's at 320. And what are they going against it? Well, you got the 305. That's interesting. And you got the 325. This one isn't quite as clear as the last one. This might be these. This one, I believe, definitely goes against these others. And we're looking at 320. That's going to be 1020 time. Here's another one. This is a time where the white probably means a sell, because it's probably going against these other big numbers right above it. Look at that, back to one right above it, 305, 325. It's a way to offset. So that's pretty big activity. And you can go on down. Nothing too far out. Where's one? All the way for, in fact, look at the time, 10:35:03, 10:35. 15 December 355 put, 355 put for 21 June of 2024. So they sold this one. They probably bought that one. It's what they call a calendar. So they're spreading the calendar out at the same price. So they bought the 355. Here we are at 376. So they're hoping that next 6 months nothing happens. Actually, since I said they bought it, 355, the market goes down and then it recovers. These guys did okay. All right. So one more thing I'm going to look at here is IWM. This is the Russell 2000 ETF. All right. Stats for today: 485,675, 1.39 puts to calls. Let's drop down time and sales. Give it a little bit to fill in. Okay. Not a lot of calls. 3,000 calls for January of 24 is the big one. 22,500 for the 17 November 23 193 put was its biggest trade. And if we look at the time, same time these two were put in, this appears to be another calendar play. They're both in white. So look at August 1st. Right now we're 194. So this could be a buy here. Actually I'm not too sure. It could go either way. They could have bought here and sold that. Or if they sold this one and bought this one. So they think the summer is going to stay up. They just go down in the fall, which markets usually, if you look for big crash dates, the fall has always been the big one. October 1929, September, October of 2008. So if they think summer stays up, 193, they buy that one. They sell that, take the proceeds to buy that. They just offset their costs. Then what else is going on here? You can see spreads. Some are kind of hard to pick out. It's a lot of calendar. Buys and sells. Look at these, same time. Again, different, separated by a couple weeks. 11 August 199 call. The 2 August 192 put. Selling the put, buying the call. Doesn't say they're tied to anything over here in condition. It's blank. But, yeah, sorry. Yeah. Yeah, they say they're individual. So if they're outrights by two different people, somebody thinks it's going to keep going down. Somebody believes the market's going to keep going up. That way they can keep their premium. This way they're hoping the market tanks in the next couple of weeks. They'll make some money. Okay. Anyway, that's a quick down and dirty of things you should look at. Option activity, time and sales, option stats, and that's about it for today. Thank you very much and enjoy remotetradingroom.com. Hope to see you again.